Hi everyone and welcome to the weekly update with me, Richard Perry, Markets Analyst at Hantech Markets. Each week I'll be taking you through the key events that I believe will be driving your investments in the coming days. And certainly this week I think will be a very significant week for financial markets with a lot going on, and should see some increased volatility finally after several weeks of rather low volatility, certainly in the FX markets anyway. Starting off, certainly moving into the new week, the Ukrainian situation has returned to the top of the agenda for investors. News over the weekend that the pro-Russian separatists had taken hostages, certainly taken this conflict into a new phase. And it now looks like the Americans are going to induce further sanctions on Russia, and President Obama has actually announced in the last day that they will be targeting individuals and companies with a view to impacting Russian growth over the longer term. So it's an interesting new move in this geopolitical phase. Furthermore, we need to be looking out for the significant amount of macroeconomic events that are hitting the wires this week, but I'll be telling you more about that in a minute. The FX markets are under a bit of upside pressure at the moment. Certainly the dollar is coming under increased downside selling pressure today. The recent move lower on the dollar index is taking it back towards the 74.9 key March and April lows, and we need to be watching out for that. But euro dollar, for example, is pushing above resistance levels. $1.3865 is the key level we need to be watching out for. A breakout above there would open $1.3905 once more. Cable also is pushing higher. It's above the $1.6841 level that was the resistance last week, and that actually is now looking to break out above a two-week consolidation pattern. Whether we're actually going to get this breakout confirmed or not is going to be seen in the coming hours, but certainly at the moment it looks to be trying to push higher. I think we're going to get a bit of a correction in cable that will give us another opportunity to get back in, as I think ultimately cable will be pushing higher, but I don't see this latest rally as being too sustainable at the moment. Dollar yen has actually turned around a little bit. It had 3 days in a row of last week where it saw lower lows and lower highs, but that's sort of turned around slightly today with a slight bit of dollar strength coming in. 101.95 has been the low, and that comes above the bottom of that trend channel that comes in at 101.50 there or thereabouts. So those are the levels that we need to be watching out for dollar yen. Moving on to the indices, the S&P 500 earnings season is now into full swing. It does not really tend to suggest that there's going to be too much growth or earnings growth coming through at the moment. You had a bit of a disappointment from Amazon on Friday that took the S&P 500 lower, and now it looks like the S&P has just rolled over near term, and there could be coming back towards that support band between 1840 and 1850. On the FTSE 100, it's actually looking fairly supported at the moment. It's actually had a decent reaction whilst other indices have come under pressure. FTSE's actually been fairly supported by a bit of M&A activity, certainly in the pharmaceutical sector, and it looks to be fairly supported. So FTSE is looking to challenge the 6,706 mark, and it needs to close above there to suggest that we're going to have a sustained move to the upside. The DAX, on the other hand, is the index that certainly is reacting rather sharply with the Ukrainian news story. Every time Ukraine hits the wires and is a negative, then the DAX sells off significantly, underperforming the FTSE. But every time we see a bit more of a positive move on Ukraine, the DAX tends to outperform the FTSE. So there could possibly be a bit of a pairs trade that you could play on there. Moving on to gold. Once more, gold has also had a big reversal. That's come on the what seems to be a return of this insurance trade. On Thursday, it had a big bullish key one-day reversal, where the gold price rallied about $30 on the back of news that Russia were mounting troops on the Ukrainian border. Friday saw a further bit of gain above the 1300 level, which I think is going to be a key mark in the coming days for gold, and I think it could be a bit of a watershed, that 1300 mark, so just watch out for that. Okay, so what are the key events that will be driving the markets in the coming days? Well, certainly growth figures are back on the agenda. You've got GDP numbers for the UK, the US and Canada. UK is on Tuesday, US and Canada on Wednesday, and certainly investors will be looking out for that, because it's the first sign that we've seen of how the new year 2014 will have been progressing. On Wednesday we've got the Eurozone inflation data. That is the first look at April inflation for this flash number, and the expectation is for an increase to 0.8% from 0.5%, and if any sort of movement around that number could certainly see the debate around quantitative easing and sort of some sort of monetary easing by the ECB back on the agenda. Probably 0.8% still doesn't really give Draghi that much of cause to be cheerful, but certainly the market is looking for some sort of action by the ECB, but if it comes in above 0.8%, then maybe Mario Draghi will have a little bit more breathing room. Also on Wednesday we've got the FOMC meeting with a further $10 billion of asset purchases and mortgage-backed securities expected to be announced, down to $45 billion in the month. But also the fact that there's no press conference scheduled for Janet Yellen suggests that maybe the market will be just taking that as probably in line with expectations. On Thursday we've got the manufacturing PMIs throughout the world. Certainly China will be a key piece of data for the riskier currencies such as the Aussie dollar and the Kiwi dollar, and also the US ISM number will as ever be very important. And finally on Friday we wrap up the week with none other than non-farm payrolls. 205,000 is expected. And that would be higher than the 192,000 that was last month. Last month was slightly below expectations, and we wait and see how this month has been going. The weekly jobless numbers, for example, have just been rising a little bit in the last couple of weeks, so perhaps that may suggest that there's not going to be too big a number that gets announced on Friday at 1:30, and also we've got unemployment as well, due to come in at 6.6%. So plenty for investors to get their teeth into throughout this week, and plenty of announcements that could create a significant amount of more volatility than we've been seeing in recent weeks. So I wish you good luck in your trading around all these numbers, and I will speak to you next week, and until then, happy investing. Thank you very much.